Mike, you just heard Mike Santoli's report on kind of what we're seeing as what's priced in the market right now. Do you feel as though this is an environment where there's still a bit of that rotation happening to more defensive names, as opposed to what we're seeing today, which is huge outperformance, by the way, in some of those names that were considered growth and perhaps higher valuation type stocks over the last several years?
Yeah, exactly right, Dom. Just take a look at what's happening, right? We've got a huge economic slowdown trade on today. And the NASDAQ is up, right? Those are the things that aren't as economically sensitive. They've also been crushed in a lot of ways. And so we're getting clear rotation away from inflation worries and higher interest rate worries and into sort of economic recession worries. I think Mike Santoli had it exactly right. You know, how much has been discounted? One thing about this potential recession, which frankly we don't even know how to define, is that it's pretty anticipated, and usually the market doesn't get hammered when it anticipates things this much. And so there's some cheap stocks out there, and I think a lot of it has been discounted.
So if it has been, I mean, like you said, if a recession does come, you can't say that you weren't prepared for it, right? Because we've been talking about it now for about 6 months, and even more so for the last 3. If you talk about those stock picks, then what are the places to be in? Is it strictly utilities and consumer staple stocks, or do you kind of still play the diversification game, given the fact that there is an opportunity that may present itself in certain areas of the market?
Yeah, I think as we come into earnings season, it's really important to give yourself some flexibility, right? That's sort of number one as we face the next 3 weeks or so. I think it's not like you can be dope slapped and say, wow, I didn't see a recession coming. And we've been talking about it, as you point out, for a long time. And as a result, I think some of the things that are recessionary are really inexpensive. There's lots and lots of names that are. I mean, we're looking for a couple things. AT&T we like because of the pricing power that they seem to have and the valuation discrepancy. They've got a long sort of runway ahead of them in order to deliver shareholder value. LRCX, Lam Research, is just a wonderful business that we've held for a long time and have made a ton of money on. And we've been through many cycles. This is not a tradable name, in my opinion. This is a name you want to own as technology continues to advance across the globe and across the sort of the development of technology. And then Wells Fargo is simply, I think, the cheapest bank out there. Part of the challenge with talking about individual stocks when the market is melting down, as it's been this year, is it feels a little bit like standing in the middle of a house that's falling down around you and saying, wow, these kitchen cabinets are beautiful, right? It feels a little odd to be talking about stocks that are getting hit so much. But, there are some valuation opportunities. And I think as we get more and more discussion around recession, I think it's going to be interesting to see what plays well.